The stock market keeps making new all-time highs week after week, but this week, are things about to change as the trade deals could be canceled? And we're also going to talk about Warren Buffett's latest warning. So as we look at the stock market day after day, we keep saying a pullback has to come, right? And so far, that has not been the case. We look at the fear and greed index. We keep teetering between greed and extreme greed, and something we've been talking about on the live stream. If we come over and look at the timeline, we can see the fear and greed index is at the highest reading that it's been at over the past year. Now, that alone does not mean that a pullback is inevitable, but then we come over and look at the most recent investor sentiment survey. This week, we see the bulls drop down again a little bit. The bulls came in at 36.8. The prior reading was 39.3. And then even the week before that, 41.4. The week before that, 45.00. So every week, week after week, as the stock market continues to make new highs, we continue to see the bulls drop off here just a bit. We can also see that this week, though, the bears also dropped down. So it was more that the neutral category really grew the most. Last week, 21.8. This week, 29.2. So we would think that with the S&P 500 making new all-time highs, the Qs making new all-time highs, and even the Dow this week was able to participate in making new all-time highs, we would think that people would be greedier and greedier, right? Well, I want to remind you, when we're over in greed and extreme greed, like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. Now, as we were talking about the wise man Warren Buffett, we come over and look at the Buffett indicator. I want you guys to pay close attention. Look at where we're at now. It is one of the highest readings it's ever been at, period. And Warren Buffett uses this indicator to gauge, is the market overpriced or not? And we can see right now that the market is 200% of the GDP. Now, look at the levels before the dot-com bubble burst back in 2000. It was below 150%. And then even look during the great financial crisis, we're right at 100% or so. And now we're at 200%. Now, that doesn't mean this cannot continue to go up higher. It most certainly can. But the fact that it is at elevated levels is something that we need to pay attention to. And keep in mind, Warren Buffett is sitting on a pile of cash. And if Warren Buffett thought that we're going to continue to make new all-time highs and keep running, do you really think that Warren Buffett would be sitting on the pile of cash? Or do you think he would have that money employed in the markets? Let me know your thoughts in the comment section down below. Now, as we come over and look at the S&P 500, everybody knows that the market put the low in as soon as Trump said he was pausing the tariffs for 90 days back over here in April. But then recently we saw a trade deal announced with Japan, and we see the market start rallying up in this last leg. And then we start to see a flurry of other deals. But is it possible that all these potential trade deals that have already been announced or trade frameworks could be in jeopardy of being canceled as early as Thursday? Because if we come over and look at this article right here, Trump's trade deals and tariffs are on the chopping block in court. What happens next? And what this article basically goes on to say is a federal appeals court will soon hear oral arguments in high-profile lawsuits challenging Trump's authority to impose sweeping reciprocal tariffs. And we can see right here, a federal appeals court is set to hear oral arguments next week, meaning this coming up week, challenging the lawsuit. Now, let's not forget, April 1st is slated to be the deadline. And what this article also goes on to say is, if Trump loses this lawsuit, it'll likely then go to the Supreme Court. And if the Supreme Court also sides with the plaintiffs out there, then all these trade deals could actually be illegal, therefore nullifying all the trade deals that have already been signed and all the potential frameworks that could be about to take place. Now, if that's going to be the case, if all the trade deals do fall apart, are we going to see countries try to retaliate against the U.S. and maybe even impose tariffs on the U.S., knowing that there's nothing that we can do back now to them? And what effects would that potentially have on the stock market? Now, if we come over real quick and we look at the SPY versus HYG, the SPY versus high yield bonds, we can see in the top chart, the SPY, as it's went up, making new all-time highs. Look at HYG, high yield bonds. So far, it has not been able to go up and break those recent highs. Then we come over and look at the Dow Jones versus the transportation index. Dow Jones is a chart on top, and we saw this past week. The Dow Jones was able to make another new all-time highs. But then we come down here and we look at the transportation index. Transportation index is nowhere near the high right over here, which is what we just saw the Dow go ahead and break back up above. Now, something else I want to pay attention to is pay attention to the yield curve, 10-year versus 2-year. Right now, it's on the decline. Now, when this is starting to move down, that is going to favor the stock market. If we see this turn and start going back up and start steepening like we saw over here, that's when the bulls could potentially be in trouble in the markets. Now, I want to make you guys aware of some amazing prop firm deals out there. Apex Trader Funding, 90% off all their evaluation accounts. My Funded Futures, 3 new plans, the core, the scale, and the pro accounts. Tradeify, 35% off all account sizes. This includes the Lightning funded accounts, formerly known as the straight send funded accounts. Last but not least, Take Profit Trader, best payout policy in the prop firm space. Make sure to use promo code EPITOME with Take Profit Trader. All links in the description box down below. Now, this week's gonna be action-packed with news, but I have a stat that I want to share with you guys here in a few moments. Look, on Monday, no major economic news. On Tuesday, we get the JOLTS job openings. Then on Wednesday, we're going to the ADP non-farm employment change, along with Jay Powell's time to shine, because we have the FOMC statement coming out with Jay Powell giving the press conference at 2:30. Then on Thursday, we get the Fed's preferred measure of inflation. We get the core PCE price index, and we got to believe that Jay Powell is already going to know what that number is before the FOMC statement is released. We also have the weekly unemployment claims coming out. Then on Friday, it's going to be another heavy hitter out there with the NFP numbers coming out. But what if I told you that's not the only news that we have to contend with this week? For instance, we come over and look at the earnings. We have a lot of major earnings out this week. We have Visa, we have Meta, we have Microsoft, Robinhood, Ford, ARM, Hershey, Amazon, just to name a few. So there's a lot of stocks reporting earnings this week. This will be one of the biggest weeks for the S&P 500. Now we come over and look at the big expected movers out there. ARM expected to move plus or minus 9%. We have PayPal on Tuesday expected to move plus or minus 7.5%. Starbucks right around 7% or so. Apple's only expected to move roughly 4% out here. Now, before we come over and look at that stat, I want to remind you guys, recently we've had some earnings coming out. For instance, look at Netflix. Netflix actually came out with a surprise beat of 1.75%. And since then, this stock has dropped just a bit. Then we saw Intel reported earnings last week. Massive gap on the way down. We saw Chipotle report earnings. Yikes, big move on the way down. We even saw Google report earnings, and initially big gap up, came down, almost filled the entire gap. And then we had a little bit of an update on Friday. So with all the earnings coming out this week, will it be the case of buy the rumor, sell the news? Because as we come over and look at this stat right here, we can see that when the back half of July makes a new 12-month high, and what do we have this past week? We actually had the markets not only making a 12-month high, but we had markets making a new all-time high. We look at this stat, look how it fares out here for August. For August, we can see up-down ratio. We're only up 9 times, and we have been down 19 times in the past when this has occurred. And this stat is brought to us by Wayne. So I'm thankful that Wayne was able to share that with us. Now, if we look at the 1% moves or more, notice on the downward column, we have a lot more downward moves of 1% or more. We had 7 1% moves up, 15 1% moves down. And at a time when it seems like the market can't stop, won't stop, only continues to make new all-time highs. Now, as we come over and look at the S&P real quick on the weekly chart, we can see not only did we close with an up candle, new all-time highs, but we also closed almost at the tippy top of the weekly range. Now, the MACD indicator on the weekly chart, still very good separation of the two lines and going up roughly 45 degrees. But we start looking at the volume profile, we have a couple distribution nodes. First one about 624.37, then this whole area right here, anywhere from 608.24 down here to about 583.55. Now, at some point, we are going to get a pullback. If we pull back right back towards this breakout over here, I would not be the slightest bit surprised. This is one of the techniques we talk about all the time on the live streams. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Now, how I like to play these structure breakout, breakdown points, first, we need to go ahead and map out this zone off the weekly chart. Now, simply map it out from the candle wick right over here to the candle body. I'm going to go ahead and extend this over here to the right. Now notice this candle right here broke out from that area. We have failed to come back and test that level. At some point, we will get a retracement down towards that level, and that would be a very minor retracement. Now, we come over, look at the daily chart real quick. Notice where that zone, that structure breakout point comes into play. You can see it comes in right between the 50 and 61.8 Fibonacci retracement level off this last leg higher we've had up in the market. Now, don't be surprised if we do push a little bit higher this week before we start coming back down. We can see the MACD indicator is basically flatlined out there. On Friday, we closed very close towards the upper end of the range. Now, on the 4-hour chart, MACD indicator did get a bullish cross once again, but that last 4-hour candle closed with a doji candle. Then on the 30-minute chart, you can see we have that little bit of a rolling effect. And as we look at the profile, we had a lot of the volume being built out up here at the upper part of the range. So if we really start breaking down below about 636.62, we got some trapped buyers up there, and that could start to send the market down here just a bit. MACD indicator on the 30-minute chart is crossed to the downside. We'll see if we start to get a push down. One of the areas you do want to look at on the 30-minute chart is going to be this minus development area. That's going to be anywhere from 636.59 to about 636.13. Now, if we can crack below this minus development area, then that's going to open the door. We can start to target some of these other high volume nodes along with the low from Friday. Then anything beyond that price point, I want to come back over here to the daily chart. And I really want to look at on the composite profile, where do we have some high volume areas? Well, the next high volume area is not going to be until about 624.21, which is very close towards the middle of the range, a little bit upper of the middle of the range, which is basically between the middle of the range and the upper part of the range. And that still would not be enough to go ahead and get that 38% retracement underway. Now we come over, look at the futures markets real quick. We can see we have a little bit of a wick on the top of this candle, a little bit of a wick on the bottom on that last 4-hour candle we saw on Friday. Now, as we come over and we look, notice on the weekly profile, we're closing above value area high, which comes in at 6418.75. Anytime we close outside of value, in this case, outside would be above value area high, then we expect the next 1 to 2 sessions, we're going to come down and retest that level. Now, since we're dealing with a weekly volume profile, 1 session equals 1 week in time. So either this week or the following week, highly probable we come down in that minimum test value area high. If we get below that, then I'd want to target the point of control, 6405.75. Then we also have value area low down here at 6348.75. But if you notice, if we break the point of control, we can then look at some of these other high volume nodes as potential targets. The first one about 6389, the next area anywhere from 6372 down to about 6366. Now, one thing to note, at some point this week, I do think highly probable we come back and we revisit this minus development area, which is going to come in somewhere in the ballpark of about 6386.25. Now, as we come over, look at the daily profiles on the 30-minute chart. Now, we have another one of those little structure breakout points that we talked about on the weekly chart with the SPY, and that would go something like this: candle body to the candle wick. However, you can see on Friday, we essentially came down and tested that level. So the first test in my book is always going to be the best test. So in that case, I'm going to go ahead and remove that level off the chart. Now we have value area high up here at 6430.5. We have the point of control, 6428.50, with value area low being about 6411.50. Now, if we stay below value area high, then I would want to target kind of this minus development area within the profile. And I'm going to go ahead and shade this whole area out. Now, we've already come into it once. So the next 1 or 2 times we come into it, I would then expect the market to, at minimum, come down towards the bottom of that zone. Then more likely than not, at least come down, hit value area low. Notice we still have this untested point of control down here, 6389.5. And then we zoom this out a bit longer. We have another untested point of control, 6336.25. Now, in the event, let's say Sunday night or even Monday, we start breaking above value area high, and then we start coming back below it, that's going to activate the volume profile rotation on the way down. And that could be one way that you may also want to go ahead and try to play the retest of value area high from the weekly profile, because if you look, value area high is going to be 6430.5. So essentially, if we're above 6430, if I wanted to get involved into the trade, I could simply have a sell stop order sitting right there just in case the market went there when I was not watching. And then we could use a quick target right here at the point of control. Then we can start playing off those weekly targets, that untested value area high, along with the daily volume profile levels and even the weekly point of control at 6405, along with the weekly minus development area we talked about moments ago. Now, if we come over, look at the VIX keeps going lower, can't stop, won't stop. The VIX is at 14.92. Now, with the lower VIX, that means the ranges in the market are going to contract. As the ranges contract, we get very boring days out there, a lot of chop fest. I traded horrible this past week. Hopefully I don't go and repeat that once again. Come over, look at the dollar index. Dollar index, a little bit of an update on Friday. Then we look at gold. Gold's been taking on a little bit of water as of lately. And if gold can break below the swing point of 33.13, then gold's probably coming down towards the next swing point, 32.91, and then down towards the next one, 32.50, and then down towards this other zone that we have mapped out, about 31.80, all the way down here to a price point of 31.24. Now, we did complete the ABC pattern up, and once the market completes an ABC pattern, we expect the market to do something other than continue in that direction. In this case, it happened to be a pullback. It also could have been in consolidation up at that level. Now, if we do start to turn and go back up, if we start really getting above about 34.08, then I do want to turn my attentions over to see if the markets can make a new all-time high. Come over, look at the Qs real quick. You can see we have to go ahead and grab our Fibonacci retracement tool, move it up here just a bit. Now, if we look at the weekly chart, you can see with a little bit of a wick on the top, not a whole lot to read into that. A wick on the bottom. MACD indicator still extremely strong. On the weekly chart, looking at the MACD, showing no signs of letting up at this moment. And this has been pretty darn impressive. From the low up here to the high, the NASDAQ has rallied 40% from the low to the high, and we have not had any sort of pullback as you look at it on the weekly chart. The best thing that we had was a couple of week consolidation right here before ultimately blasting off to the upside once again. Now, as we come over and look at the daily chart, at some point we will retrace to the 38% retracement. But in the meantime, what are we going to do? On Friday, we formed a little bit of a wick on top. We have some of these high volume nodes. The first area, if we do start to pull back, 561.56 would have my attention. And then the next high volume area right over here, about 556.13, and then the 38% retracement. Then we'll see if we can get some of these deeper retracement levels underway. Keep in mind, this week we have the Fed coming out on Wednesday. But if we look at what the market's anticipating, there's a 95.9% chance the Fed will do nothing at the next meeting. The market is pricing in, however, the Fed will start cutting rates at the next meeting in September. But will Jay Powell give us some insight in terms of when the Fed is likely going to cut rates and by how much, and how is the market going to react to that news? On the 4-hour chart, we see the Qs basically flatlined out there on the MACD indicator. Last 4-hour chart, kind of an inside bar, which means the next candle, highly probable, will be a breakout or breakdown from that last 4-hour candle. On the 30-minute chart, you can see we kind of rolled off the high on Friday. And if you notice, we closed below the point of control. And if we get below value area low, then I do want to look for the market to come down towards about 565.07. Then look for the market to retest the lows from Friday. Anything below the lows on Friday, I want to refer back over to the daily chart. Where are the high volume nodes on the composite profile? And we talked about this. 561.90 would be the first area I want to watch. Also on the 30-minute chart, MACD indicator elevated above the zero line. Bearish cross of the two lines, and we'll see if we can get a dip down towards that zero line out here. Now, as we come over, look at the NASDAQ futures, you can see pushed on up this week, made another new all-time high. And we actually closed above the weekly value area high, which comes in 23,424.75. We're going to have the point of control, 23,394.75, with value area low coming in at 23,233.25. Now, we do have a little minus development area within this profile as well, and that's really going to come in anywhere from 23,325 down here to about 23,308. Now, in order for me to want to go ahead and target this area, at minimum, we must get back below value area low. And like we talked about with the S&P, anytime we close outside of value, expect the next 1 to 2 sessions, we're going to come back and visit that level. Since this is a weekly volume profile, then we're expecting within the next 1 to 2 weeks, this week or next week, And I do believe it'll probably be this week, especially with all the earnings coming out. We have the Fed and a lot of economic news coming out as well. Now, as we come over and look at the daily profiles on the 30-minute chart, value area high will be up here about 23,462. The point of control will be 23,442.5, with value area low being 23,397.50. Now, there's another area I want you guys to focus on within this profile, and that's going to be right here, this minus development area, 23,428 to 430, somewhere in that ballpark. Now, with this, we could have a potential another ABC pattern on the way up off the 30-minute chart. Here would be the A to B leg. The B to C leg is a corrective leg. And then we need to go ahead and project to see where the D leg completion would come into play. So if we grab our Fibonacci extension tool, we measure A to B, B to C, and we project, that gives us a price completion at about 23,548.71. Well, you know what? We have another target up a little bit higher than that. We've been talking about this on the live stream as well. And that would be this A to B equals C to D pattern off of the 4-hour chart, which would come in something like this. And that gives us a price completion at about 23,653. Or if we want to use the alternative measurement for this pattern, that would give us a price completion about 23,686. So we do have some potential ABC patterns that could complete above us. Now, in order for this pattern to be validated, keep in mind with the ABC pattern, we must take out the B point, which would be all-time highs in this case with the markets. And if we really start breaking back down below this area, we'd have to redraw out that pattern. If we drop down below the 78.6, then that would invalidate the pattern for me. Now, as we look at this, we have that minus development area. Now, if we can break above value area high, we start coming down. I want to target the point of control. I want to target the minus development area. We can also target these high volume nodes along with value area low. Anything below value area low, I'd want to turn my attention towards the next high volume node, about 23,369. Anything below that, keep in mind, we still have this untested value area high, 23,280.75. But I do want to warn you guys, if you look to target this value area high, the rule behind that was we were either going to target it last Thursday or Friday. Neither of those days did we come back and test it. And quite often, when we do not test it within the next 1 to 2 days, it ends up being multiple weeks before we come back and visit that level, which could, AKA, give us that blow off top before we start to get a pullback in this market. Now, if you guys like to learn about the new plans with my funded futures, the ins and outs and the differences between them, then make sure to watch this next video right here.